Bloomberg Audio Studios.
Podcasts, radio, news.
Let's get through it, guys. We got a bunch of numbers, and we do have the stock. Shares of Nvidia up about 4% in the after hours. The big things, announcing a 10-for-1 forward stock split, and to the outlook. We talked with our Ian King. This is going to be important. See, second quarter revenue, $28 billion plus or minus 2%. The estimate is $26.8 billion. Remember, though, the whisper number that Ian mentioned was about $30 billion or above $30 billion on the street.
Some analysts run the range. We're saying up to $30 billion.
But it's interesting.
Still, higher than the consensus.
Absolutely. But it can be funny with that. First quarter data revenue, this is important. This is the bulk of their business, right? $22.6 billion. That is above street estimates of $21.13 billion. Gaming revenue, much smaller part of the business. First quarter gaming revenue, that was pretty much in line, $2.6 billion. The estimate was for $2.62 billion. And again, the company boosting the quarterly cash dividend to 10 cents a share from 4 cents a share. So really paying back all of that cash that they've been generating, a lot of it, right, giving it back to investors.
The shares up right now about 4.4%. They climbed as much as 5.1% after that second quarter revenue outlook topped estimates. You heard the numbers, too, there about its data center business. It did well in the fiscal first quarter. Revenues came in at $22.6 billion. They were above the data center consensus of $21.13. And then, of course, that 10-for-1 forward stock split. Huge news.
Well, and you used something you focused on earlier. Adjusted gross margin for the first quarter, 78.9% versus 66.8% year over year. The estimate on the street was 77%, so that's coming in higher than forecast. R&D expenses, $2.72 billion. That is up 45% year over year. The estimate was for $2.73 billion, so a little bit lower. For the full year, gross margins are expected to be in the mid 70% range. Full year operating expenses are expected to grow in the low 40% range. So we're getting some view and some thoughts in terms of the outlook. Right now, we've got shares of Nvidia. They're up 4.4% in the after hour. And the company says it's poised for their next wave of growth.
Ian King writing on the live blog right now that the $28 billion revenue forecast solidly above the consensus estimate. But as you mentioned, Carol, not as wildly optimistic as some projections, which had ranged to more than $30 billion. Stock splits, Ian adds, in Nvidia's case, a 10-for-1 exchange are usually done by companies to keep their shares affordable by as many investors as possible. This one, Ian notes, is going to come into effect in a little less than a month, that on June 7th. You could argue, though, that stock splits don't matter as much anymore because you can just buy fractional shares very easily.
That's a good point. All right, so let's get to it. Let's get some analysis on this report. Dan Morgan is with us, Senior Portfolio Manager at Synovus Trust Company, joining us from Atlanta. Also, Kunjan Sobhani, Bloomberg Intelligence Senior Semiconductor Analyst. Dan, let's start with you. Your initial thoughts on the release.
Hi, Tim. Hi, Carol. Quite frankly, I thought it was a fantastic quarter. I mean, Ian King, who I know very well, mentioned a whisper number at $30 billion in revenues. I was hearing more close to $26 billion. So obviously they came in above that, 26.08. The beat in data center is really important. Obviously it came in at 22.6 billion. That was a beat. And Carol and Tim, heading into this report, we had a lot of people out there who were very concerned that there would be some sort of like air pocket between ordering patterns with the current chips that they're shipping, which are the Hopper series, and that there'd be some large customers that would hold off and wait until the new Blackwell series was introduced sometime this fall, and then we would get some sort of slower period in growth in terms of data center revenues. And there really is no indication of that on this current quarter. So hopefully this quarter will be able to answer back to some of those worries. And I thought across the board, and quite frankly, guys, a 10-for-1 stock split is absolutely huge because like Amazon and Google, when they both did 20-for-1 stock splits, it really allows the retail investor to participate more in terms of buying more shares. And it's a psychological thing, but it does boost the stock.
Hey, I just saw also one eye-popping number, free cash flow. Maybe this is why they're doing that dividend and so on. Free cash flow, $14.94 billion versus $2.64 billion year over year. The estimate is for $12.29 billion. So, generating some nice
still
cash.
Looking really good. I want to bring in Kunjan Sobhani, Bloomberg Intelligence Senior Semiconductor Analyst. Kunjan, just build on what we heard from Dan Morgan there. Is there anything in this most recent report from Nvidia that investors shouldn't love?
I mean, look, the dividend increase is massive, more than 100%, and the stock split, I think not a negative, but the expectation was for a sort of low double digit, at least beat on both the print and the guide. We didn't see that. This one, for the past many quarters, we have seen beats and raises in that range. So in the absence of the dividend increase and the stock split, we could have seen some more volatility here because, again, it was good, but not as good as people expect. But I think in the call, the dividend, free cash flow, and the stock split will be center stage.
Well, Kunjan, I do wonder, is there anything in it that makes us like reset our think and enthusiasm as investors that we have seen when it comes to kind of the AI investment story? Because Nvidia, obviously the linchpin, if you will, to so much of it when we talk about AI, right? If you're going to do AI, you need Nvidia chips. So is there anything in this report that makes you rethink the expectations about the impact of AI, Gen AI, and all that it might bring, and also as an investment story?
Not really. From a long-term perspective, the fundamentals remain intact, the story remain intact. We were expecting some kind of, some folks are calling it the air pocket in this next quarter, and the quarter coming in October is just a temporary timing situation where the new Blackwell chip starts ramping, and before that, customers want to wait for that. So what you might see, and we are seeing, a sort of moderating sequential growth, but I don't think that should lead to any concerns whether this AI rally has legs or not.
Jensen Huang, in the press release, of course, the founder and CEO of Nvidia, saying our data center growth was fueled by strong and accelerating demand for generative AI training and inference on the Hopper platform. Beyond cloud service providers, generative AI has expanded to consumer internet companies and enterprise, sovereign AI, automotive, and healthcare customers, creating multiple multi-billion-dollar vertical markets. So Dan Morgan, I mean, what are you hearing in terms of channel checks? Jensen Huang, no surprise, he's going to be all in. This is his bread and butter, but it does sound like it's broadening out in terms of the demand, everyone trying to figure out what their AI play is for their business.
You're right, Carol. And, if you look at kind of going back to that pocket issue, coming into this quarter, estimates were that the Hopper 100 chip had about a 10-day or 10-week lag time between order periods. So there's still some slight overage of orders in that, and they're trying to meet that. But you're right, Carol and Tim, it looks like we're spilling over. We've been following the stock together, it seems like, for 5 or 6 years on the radio show, and we've gone from a gaming company to a data center company, and now we're seeing it going from the data center into these other areas.
There was a little crypto mining in there, too.
Which is just unimaginable. I'm sorry, Tim.
There was a little crypto mining in there, too, during that time, Dan.
Yeah, I had some crypto mining going there for a while, too, but it's just amazing, Tim and Carol, that, before it was really a data center story using GPU chips in terms of AI. And now, like you mentioned in the press release, it's now spilling over into all aspects of different industries. So it just increases the amount of potential customers just beyond the big data center users that we keep talking about, like AWS and GCP and Azure. And it just becomes a bigger and bigger story.
Well, it raises the question, Kunjan, that I've had for months at this point, which is the whole basic thesis of successful companies that are building something at high margin. And if they're the only ones doing it, then there's something wrong with it, or they at least have like an incredible moat. And I'm wondering how long Nvidia can keep doing this. I mean, they've got first quarter adjusted gross margin of 78.9%. Estimates were for 77%. How long can Nvidia keep doing this before a competitor is able to build something similar or catch up?
I don't have an answer for how long, but I will, before the Blackwell announcement, before GTC, this was the exact questions we were getting a lot. And the question was like, after H100s or H200, will the next chip be competitive and provide a lot more value that they can continue demanding such premium? And the Blackwell is showing that, yes, in terms of performance increases, in terms of TCO for their customers, it came out and beat every other product or the wannabe products in the street, and hence that is going to command even more premium. So I think as long as they can keep on outcompeting themselves and their peers, they should be able to command this premium.
So Nvidia shares, just to rehash, they're off their highs in the aftermarket, but still up about 2.7% as we speak. And just to kind of go over some of the headlines that did cross just moments ago, again, Nvidia giving a strong forecast on sustained AI momentum specifically. Just going through some of the numbers here, boosting its quarterly cash dividend to 10 cents a share from 4 cents a share. We talked about that 10-for-1 forward stock split. Again, data center revenue for the first quarter, the past quarter, $22.6 billion. That's a beat. $21.13 billion was the estimate. And then the outlook sees second quarter revenue, $28 billion plus or minus 2%. And the estimate on the street is below that at $26.8 billion. So Dan, where do we go here from in terms of Nvidia? Does it kind of make sense based on the spending that we heard from the likes of, Alphabet? I feel like Microsoft, was it Apple, was it Meta? They all kind of talked about, right, cap spend when it comes to AI specifically. So the enthusiasm maybe we've heard through the earnings season from some of the big tech players, does it match up with what we got from Nvidia?
I think so, Carol. The estimate going into fiscal year 2024, if we were to take Meta, Microsoft, Amazon, and Google and combine their CapEx that they're mostly dedicating towards AI, you're looking at about $185 billion. So it's a huge number. And most of them have very healthy CapEx expectations going into this year. And of course, everyone's scrambling to outdo each other in terms of AI initiatives. So Carol and Tim, this report just keeps reiterating the amount of spending that's going into this. And of course, NVIDIA's there kind of waiting with their catcher's mitt, catching a large portion of it. So I don't see any changes right now based on the CapEx guidance that we got at the beginning of the first quarter from the big tech names. And then NVIDIA coming in with this beat. And then also strong guidance for the second quarter of 25. They did come in above expectations. So maybe that'll put to bed some of these worries about this transition that we talked about between Hopper and Blackwell as we move into the fall quarter. And you would expect those quarters to be huge in anticipation of the fact that they'll have a new product cycle going and starting to ship the new Blackwell. So to me, everything's operating on all cylinders right now for NVIDIA.
Hey, Kunjan, before we let you go, 25 minutes to go until the call starts for NVIDIA shareholders, investors, and of course, analysts as well, like yourself. What's the question that you'd want to ask on the call today?
Yeah, so a couple of things, just again, going through the press release right now. One key thing we noticed this time was that the cloud customers are now somewhere between mid-40s. Until last quarter, they have been above 50% of the data center revenue. So that is interesting. We think in terms of long-term, that's a positive because we do want that cloud concentration to moderate along with revenue growth. So that could be a long-term positive. We'll have to get more details on what drove that. Was it just the cloud customers are going with more of their own ASICs? So that would be something important that we are going to look out for.
All right, great. And so off to the call we go. All right, shares of NVIDIA right now, though, up about 2.4% here in the aftermarket. Our thanks to our Kunjan Sobhani, Bloomberg Intelligence senior semiconductor analyst. Will be watching out for his research into the Thursday trade. Dan Morgan also watching out for his research as now that we've got all the details, if you will, from NVIDIA. He, of course, senior portfolio manager at Synovus Trust Company.